Hi, this is James Zane with Old Capital, and I'm here with Nick.Fluellen of Fluellen Hoover and Marcus Millichap to talk about a new deal in Cleburne. So, Nick, maybe to kick it off, give us a little bit of your background, and then we'll jump into this deal.
Yeah, thanks for having me, James. My name is Nick.Fluellen. We specialize in Class B and C multifamily here in DFW primarily. We also have a big secondary markets team covering all the surrounding regions and states, and 75 unit under team that's looking at and focusing on the smaller assets here in DFW. And so excited to talk about this deal today. This is one of the better deals that I've seen in the last couple of years. In fact, it's probably the best yielding deal I've seen in the last couple of years. So excited to tell everybody about it today.
All right, let's jump into Northridge Court, 86 units in Cleburne. And so let me pull up the map and give people an idea of sort of where Cleburne sits in sort of the DFW Metroplex here, Nick.
Yeah, so Cleburne is really southwest of Fort Worth. You can access it from the Chisholm Trail, and so over the last, this is the fourth time I've sold this deal. This it didn't always have Chisholm Trail access whenever I first started working on it, so it's been a really significant boost to the Cleburne submarket and for this deal specifically.
So from the apartment Northridge, how long does it take to get sort of to downtown Fort Worth with that Chisholm Trail there? Is that like a 20-30 minute drive into downtown?
Yeah.
Okay.
Yeah. I would liken it to maybe Plano, driving from Plano to downtown Dallas or something like that on the other side of the Metroplex. But yeah, it's very quick and easy to cruise on up to Fort Worth.
Okay. All right. So I zoomed in a little bit here and maybe give people an idea of sort of the, 1 mile, sort of 3 mile, what's sort of in Cleburne and sort of where this apartment sits.
Well, I would say it's your kind of typical suburb. I mean, you've got all the retail and restaurants and all that. This is right off the main drag and Cleburne there. It's adjacent to a Walmart supercenter. The area is really a fantastic area. When we're looking at most deals, one of the first things we look at are what are the area demographics in the sense of average median household income. This property is 57,000 median household income in a 1 mile radius, and north of 50 in a 3 mile radius and a 5 mile radius as well. So that is rare. I would say if you looked at most other assets that you see on the market, they're not going to check those boxes. And so, again, another reason that we really are high on this deal. I think one other thing that I've learned over the years is that when you have a high area median income like that, a lot of times what that tells you is there's not a lot of apartment competition. There was an area that was saturated with multifamily everywhere. That would tend to drive the average household income down, median household income down. And so that is absolutely the case here. There's minimal competition, and therefore that number is higher than what we would typically see.
So there's mostly, there's retail along sort of that main strip, and then mostly single family, and then just a handful of apartments that we'll touch on sort of in the rent comps. But then if people want to live in this area, then there's only a certain amount of competition. So that is good for this property. I pulled up some pictures of the property, maybe talk about maybe some of the exterior amenities and what the current owner or previous owners have done to this property.
Yeah. Well, I would say, first of all, the property is, there's a street that goes right in between the property. And so you have the properties on two different sides of that street. On one side of the property is the townhome phase. And so again, even though I said there's not a lot of multifamily out on this area, even this, which is multifamily, feels more like a home. There's 48 units, which are townhome style units, and those are 980 square feet. And so that's on one half of the property. The other side is divided between 1 and 2 bedroom floor plans. There's kind of your typical. We have yards in the townhome units. The other side, you've got grilling area, some pergolas. We have grilling areas and picnic tables really throughout both sides of it. And again, the proximity to the major thoroughfare through town is great, and then literally Walmart is right next door. So really nice community, has a really good feel to it. And I think if you're really a family or an individual, a single person or whatever looking to live out there, I mean, you got a little something for everyone here.
All right. So I pull up some pictures of sort of classic units and then premium. Can you give people an idea of sort of what's been done on the interior so far?
Yeah. So the majority of the units have been touched in some way, shape, or form. I would say it's a little hard for us to show you exactly what's been done, only because, again, this has had 4 owners in a very short period of time, all who've been very successful in implementing their business plan on this deal. And so there's different generations of upgrades, if you will. And so I would just say that the main takeaway is that the vast majority of these units have been touched and are in really, really great condition, like you see on the right of your screen here. There's not many classics. We did not, in our underwriting, do a big renovation program. There's certainly things you could do, but that's not even necessary for this deal to be an absolute home run for the next guy.
Do you see anybody in the submarket going to maybe quartz or stainless or anything like that? Do you see that in any of the rent comps, or are people just sticking to sort of black appliances and maybe resurface countertops for now?
Yeah, I haven't seen quartz or stainless, and I know we'll talk about the rent comps in a moment, but I mean, to be honest, we're really leading the way out here in terms of rents in the submarket, and so and continuing to go up multiple times a year, and the new prices are being absorbed and accepted by the market immediately. So I wouldn't say that you couldn't do it. I mean, I think there's always a level, especially when you're essentially 100% leased at almost all the time. I think that's a great sign that you're not getting a lot of price resistance. But as far as, hey, I'm going to go copy what this property's doing because they seem to be having a ton of success. There's not a model right now that says, hey, I got to go do quartz and granite and stainless appliances, and if I do all those things, I'm going to get $250 more, in rents. That's not out there right now. We're really kind of the trendsetter at this point in time.
All right. So jump into, this is some of the highlights of what you think sort of the value add pieces are. So maybe run through these items here.
Sure. As I mentioned earlier, one of the things that just jumped off the page. In fact, I had to kind of double check our underwriting and just make sure because the numbers look so good out here that you almost kind of do a double take. But the cash flow is absolutely ridiculous. And so when I say ridiculous, I mean, like, it's not uncommon to get 6 or 7% cash on cash return right now. And quite honestly, a lot of people would be really happy with that. 6-7% return with some upside over time and organic rent growth over time, maybe some upgrades, et cetera. This deal walking in is north of 16% cash on cash return. And by the way, north of 16% cash on cash return that's with a tax adjustment. And that's with us tripling what the current taxes are. Now, I will tell you this asset is very under assessed relative to what the likely purchase price is going to be. However, again, as I mentioned, we've sold this 3 times before, and the taxes really have not moved in any of those transactions. And you can go to Johnson County's website and see the history of this property. And it's been very, very steady for the last decade. So I would think, the taxes tripling is extremely unlikely. But if they did, that's okay. You'd still have north of a 16% cash on cash return. If they quadrupled, you'd still have a 13.5 cash on cash return. So these kind of yields are not found right now. And so it's just a testament to how well this property is doing. And if some people would say, hey, well, if I got that kind of yield, I mean, what's the upside? They just had another rental increase. So there's a lot of loss to lease that is now burning off. In fact, the last 10 new leases, or the last 10 leases, new leases and renewal combos, the average rental increase is $164. So, I mean, there is still a lot of upside here. So, I just would really encourage everyone who's looking for this size of a deal. It'd be crazy not to go out and take a look at this. It shows well, it's in a great location, and the yields are off the charts. So I alluded to the loss to lease. The only reason the loss to lease is as high as it is because they've consistently bumped rents. And just when they're having success and continuing to absorb the new rental rates, they just keep pushing, and then those new rates keep getting accepted by the market. So that's a very quantifiable upside, for someone else. This asset also it's run all bills paid now. It hasn't always been run all bills paid. Some of the previous owners have run it where the residents are paying their own electricity and they're rubbing back water. The all bills paid metric has worked really well out here, and it's the only one of the competition that's really doing that. There's one other property that's doing it, but I wouldn't consider it a great competitor of this property. But you could, because there are individual meters, you could cap the electricity as well, and I've seen people do that, and you're either making money off the electricity or you're breaking even, but you're never losing money. And that's the idea behind capping that. Because these are townhome units, there is the ability to potentially do reserved parking as well. The way the property is laid out, just right outside people's fences, you could potentially, the fences are on the other side. There's a sliding glass door in the back. And so if you converted that to either French door or some way where you could get in and out of that back door with like some sort of lock and key, then you'd be able to charge very easily for parking. And so I think that's a viable business plan moving forward. And then the last thing is installing ventless, kind of the all-in-one washer and dryer connections, and really probably just furnishing the units. I think that is something you could easily get another $50 a month for. It's obviously not holding them down now, not having that, but that's an area that I think you could potentially have some upside in as well.
So installing those washer dryer connections into the townhome units, potentially, you're thinking, like the larger units?
Yeah. I think you could do it in all the units, but especially the townhome units, it would be, there's a lot of space in there. So but I do think you could probably do it in every floor plan.
Okay. All right. So here's some of the sort of highlights on the property and sort of how it lays out. Anything you want to? So right now it's being third-party managed, 2 staff, 1 in, 1 out. Owner pays essentially all the utilities. And then any other highlights you want to talk about in terms of recent capex that the seller's done?
No, I would just stress that the property is in really, really good condition. You have great owners who own these assets right now, and there's been great owners before them. Actually, there's been a string of 4 really good owners out here that most of who the private investment community probably would recognize their names. So really good owners. The property's been really well cared for. It is really in a turnkey physical condition, and there's nothing that's kind of been left untouched for the next guy.
All right. So let's talk about sort of unit mix. and then maybe touch on the rent comps in the submarket.
Yeah, yeah. Well, and like I mentioned before, half the property is the townhome style units, and you can see that right there, the 48 unit, the 2-bedroom, 1.5 bath townhomes, and then the other side of the street is the remaining 38 units. Great unit mix, predominantly 2 bedrooms. 68% of the property is 2 bedrooms. As far as the comps, again, we're one of the only all bills paid properties out there. We've made adjustments to the other properties for electricity and water and sewer just to try to equalize these rents. So these rents are adjusted, so they would paint a good picture of what it would look like if all properties were all bills paid. And you can see we're really leading the way in the submarket there, and pretty much across all three of the floor plans. So now, granted, that's with a recent rental increase, and so we still have to get all the residents that are living there at these rents, but all the new leases are being signed at these rents right now, so they are tested and leases are being signed at these rents right now. So that'd be the only comment I'd have. The market is strong. All of these rent comps are mid-90s or higher occupancy. Again, that just speaks to what I alluded to earlier, that there's not a ton of multifamily in this community, and the demand for it is very high. So good comps. We're in a really good position. We're in a really good location, and but I think all these comps are solid and strong rent comps.
All right, let's flip over to the pro forma. So we sort of took, I guess, T12 versus where you think the property could go. I highlighted a couple things on the rents and then the taxes. Anything else you wanted to touch on this pro forma?
No, I think what you see there is you see a lot of loss to lease in the current column. And so to the first box that you highlighted, the gross potential rent, you notice that it does jump in our projected year one column. That's again, and just as a result of as leases burn off, either they're renewing at the higher rate or they're moving out and the new person's signing their rent at the higher rate. And so that's going to happen over the course of the next 12 months. And so you're going to see that loss to lease number go down quite a bit. If recent history is any indicator, they're going to continue to keep popping rents too. And they've done a really, really good job of doing that. This property is 100% lease and stays upper 90s all the time. We modeled a 6% vacancy and collection loss in our projected year one. And so that'd be something else I'd call your attention to. From an expense standpoint, there's just not a lot. I mean, the expenses are really in the box pretty much in every category. The wild card is the taxes. But again, I love the situation that a new investor would be in, because I'd much rather them start low, as long as I knew that I could withstand a big tax increase, regardless. That's fine. We underwrote them at 60%. I think, again, that's unlikely, but it doesn't really matter because all of our numbers and projections are assuming that 60% is accurate. So we did 60% in year one, 65% in year two, and 70% in year three. So that's that's how the underwriting is. Everything else looks very clean and straightforward. And again, this is third-party fee managed right now, so this is nothing that somebody shouldn't be able to easily duplicate if they kept the existing management or hired a new third-party management.
Okay. Wow. So strong NOI. So obviously, a lot of deals that we look at, we have to look at agency, and then we also look at bridge, and we've been doing a lot of bridge financing. And so we wanted to show people sort of two options on this deal. Starting on the left-hand side, really on the Fannie Mae side, you could go with yield maintenance, you could go with step down, depending on, sort of your hold period. and that's sizing, close to 75% to 80%, depending on where the purchase price ends up. And then Freddie Mac floater is where we're seeing a lot of people going now that this deal is sort of the loan amount's above 7.5 million. So the Freddie Mac floater is in play, and we're seeing them be pretty aggressive on their quotes. And so we have, your all-in rate could be, 270 to 280 in that range. And then you can get interest only, and then you have a 1% prepay. So we're seeing a lot of people go with that Freddie floater if the deal sort of makes sense and is above 7.5 million. And then if this,
yeah, I think that's the option that most people have indicated they'd be the most interested in right now,
right.
Or the bridge side. But yeah, that Freddie floater is a very attractive loan that would let somebody get in and out of this deal in a short period of time without a big prepayment penalty.
Yeah, and depending, I guess it would depend on your rehab budget. So if you're going to come in and have like a very heavy rehab budget, then the sort of bridge option might make sense over here on the non-recourse bridge. So if you have a heavy rehab budget coming into the deal and you want a little bit more proceeds, Freddie Mac's not going to give you any of those proceeds. So a bridge loan might be able to do that, and their pricing is going to be a little bit more expensive than Freddie. It's going to be LIBOR plus 3.5. So you might be 3.75 to 4% all in. And it'll be a shorter term. So, but those are the options available right now, but very strong cash flowing deal. So Fannie and Freddie would like a transaction like this a lot. So, all right. In terms of the deal, I know it just got released in the last week and a half or so. Have you guys set a call for offers date yet, Nick, or just taking?
We have not. Yeah, we have not set an offers date yet. Coming off the July 4th holiday here, we're just letting people get back from vacations and all that and get settled in. So we're really just now starting our property tours, but we will announce an offer date at some point in the next couple of weeks and go from there.
Okay. All right. Any final comments wrapping up on this deal, Nick?
No, I would say this, and I don't know that I actually have alluded to this. The whisper price is 11.5 million on this deal right now. And I would tell folks to dig in. I mean, this is the best yielding deal that I've seen, and it's really not even close. And so I would encourage everybody to dig in. I think there's maybe been some folks that say, oh, okay, well, maybe the price per unit's a little higher for this age of product, which I understand. Some people initially saying that without studying the unit mix and the financials and the rents and the submarket. But I am telling you, if you are looking for a yield deal and a deal this size, I cannot think of a better asset than this one. I mean, we're looking at deals all day, every day, and this one jumps off the page. And when you see it, everybody likes it when they see it. Everybody likes the location. They like the physical asset. So just would encourage everybody to dig in and to get in touch with me if you want to set up a property tour. And we'll get you out there and answer any other questions you may have.
All right. Thanks a lot for coming on, Nick.
Yeah. Thanks for having me, James. I appreciate it. And I look forward to talking to folks soon.
All right. See ya. Bye.